Homebase began with a very simple idea. In 1979, Sainsbury's and Belgian retailer GB InnoBM wanted to take the supermarket-style layout they knew so well and apply it to do-it-yourself and home improvement in Britain. The first store, branded Sainsbury's Homebase, opened on the 3rd of March 1981 on Purley Way in Croydon. By the late 1980s, that idea had taken off. Homebase had opened its 50th store and had become the 4th biggest home improvement retailer in the UK. It was not number one, but it was a serious player, using a cleaner, more supermarket-like layout to stand out from old-school sheds. A big turning point came in January 1995. Sainsbury's bought Texas Home Care from Ladbrokes. Overnight, Homebase tripled in size. Texas had 11,600 staff. Homebase had 4,500. Over the next few years, those Texas stores were rebranded into the Homebase format, a process finished by 1999. In October 1999, Sainsbury's also bought the Hampton Group, which ran 10 Homebase franchise stores in Ireland. The chain was no longer a side project. It was a large national brand. Homebase also pushed itself into British pop culture. From 1999 to 2005, the company used men-behaving badly actors Neil Morrissey and Leslie Ash in its advertising. For many shoppers, those ads made Homebase feel like the fun, slightly more stylish alternative to a bare concrete shed. By December 2000, Sainsbury's decided it was time to cash out. In a two-part deal worth £969 million, Sainsbury's sold 283 stores to venture capitalist Schroeder Ventures for £750 million and 28 development sites to Kingfisher, the owner of B&Q, for £219 million. At that moment, Homebase held a 13% UK market share and employed 17,000 people. On paper, it looked strong. In November 2002, Homebase changed hands again, this time to Argos Retail Group, which later became Home Retail Group in October 2006. The chain kept trading, but ownership was already starting to move like a relay race. Each new owner wanted to improve the business. Each one pulled it in a slightly different direction. The most infamous chapter began in the mid-2010s. In January 2016, Australian conglomerate Wesfarmers, owner of Australia's #1 hardware chain Bunnings, announced it would acquire Homebase for £340 million from Home Retail Group. CNBC reported that Westfarmers paid about $700 million Australian dollars, roughly $530 million US dollars, for the deal. The transfer of ownership completed on the 27th of February 2016. Westfarmers appointed Peter Davis as managing director, replacing Echo Lou. The plan was bold. According to Bunnings and CNBC reporting in May 2018, Westfarmers wanted to convert all 265 UK stores and 15 Irish stores to the Bunnings warehouse brand within 3 to 5 years. Here is where the mainstream story often simplifies what happened. Many people say the British just did not like Bunnings. That line misses the specific decisions that turned a strong number 2 or 3 chain into a distressed asset in just 2 years. Retail Dive and Retail Insight Network described the first major move. Westfarmers immediately fired the incumbent Homebase management. That removed the local knowledge that had worked hard to differentiate Homebase from B&Q. At the same time, Westfarmers reversed planned store closures. Home Retail Group had lined up closing roughly a quarter of the stores. Westfarmers cancelled this, confident that its Australian model would fix everything. Then came the product mix. CNBC reported that Westfarmers dropped popular kitchen and bathroom ranges that had set Homebase apart. Retail Gazette later wrote that soft furnishings and home goods were stripped back in favour of a no-nonsense DIY shed full of power tools. That move alienated Homebase's core female customer base, which had chosen the chain because it felt more like a home store than a warehouse. Stocking choices showed the same blind spot. In a CNBC interview in May 2018, Wesfarmers CEO Rob Scott admitted that the company did not stock properly for the British winter. They underestimated demand for heaters, cleaning products, and storage. Analysts quoted by Retail Insight Network joked that Wesfarmers must have thought British people spent most of their time in huge gardens, cooking on barbecues. The first UK store to rebrand was the St Albans branch in November 2016, with the Bunnings warehouse format opening there in February 2017. Critics quoted by Retail Insight Network described the converted stores as bargain bin-littered dumps with handwritten signs. On top of that, Homebase left the Nectar loyalty scheme on the 31st of December 2016, cutting off another familiar link with existing customers. By early 2018, the numbers told the story. In February 2018, Wesfarmers reported a £57 million loss for the year to June 2017 and announced a review of the business. SBS in Australia reported that Wesfarmers then booked $1.02 billion in impairments against the UK venture in the first half of 2018, which helped drive an 87% fall in group first half profit. Morningstar analyst Johannes Faul estimated the total cost to Wesfarmers investors at about $1.4 billion Australian dollars over just 2 years. SBS also noted an extra loss on disposal of between £200 and £230 million, or about 323 to 406 million Australian dollars. On the 25th of May 2018, after just over 2 years of ownership, Wesfarmers sold Homebase to turnaround specialist Hilco Capital for a nominal £1. The 24 stores already rebranded as Bunnings were switched back to Homebase under the new owner. Rob Scott himself called many of the mistakes self-induced and stressed the importance of local leadership in overseas deals in comments reported by CNBC. Many commentators now focus only on Wesfarmers as the villain. Global Data's Matt Walton, quoted by Retail Gazette in November 2024, argued that Wesfarmers inflicted permanent damage that Homebase never fully recovered from, even though Hilco staged a brief turnaround in 2019. But that is only part of the picture. Hilco's own actions and wider market changes shaped the final collapse. Hilco acquired Homebase in 2018, aiming to restructure the chain. The Financial Times later reported that between about 2015 and 2021, Homebase's market share dropped by more than half. Under Hilco, there was progress at first, but the gains did not last. The financial year to the 1st of January 2023 showed how fragile things were. The Financial Times reported that Homebase recorded a pre-tax loss of £85 million. Retail Gazette reported that turnover fell from £788 million to £701 million, an 11% drop in just 1 year. That is not just tough trading. That is a heavy fall in sales combined with deep losses. Damien McLaughlin, Homebase's chief executive, told The Guardian that it has been an incredibly challenging 3 years for the home and garden improvement market, and that the company's efforts have not been successful. Retail Gazette pointed to rising energy and freight costs, inflation, and weaker consumer confidence as major pressures. Competitors like B&Q and Wickes also felt those pressures, but they had stronger online offers and clearer brand positions. Critics quoted by Retail Gazette argued that Homebase did not just suffer from the economy. They said the chain failed to explain what it stood for and lost relevance against B&Q, Wickes, and even online sellers. That view challenges a common belief that Homebase was simply killed by the cost of living crisis. The data from 2023 shows that Homebase's sales dropped 11% when many rivals were holding sales more steady. That gap suggests strategy and execution played a role, not only macroeconomic shocks. There were also serious questions about Homebase's ownership structure under Hilco. Retail Gazette in January 2025 reported that an entity called Arc Finco, linked to Hilco, was owed between £524 and £534 million by Homebase. Teneo, the insolvency firm later appointed as administrator, was still assessing if that debt was secured or unsecured, and said recovery was unlikely. Analyst Mark Pilkington, speaking at a BHETA event in 2025, raised concerns about when owners knew the business was in serious trouble and how debt was built up before the decision to enter administration. This connects Homebase to a wider pattern. Analysts quoted by Retail Gazette compared it to cases like Wilko and Debenhams, where private equity or venture-style owners left suppliers unpaid after collapses. Homebase's use of a pre-pack administration in November 2024, reported by the Evening Standard, meant the brand and selected stores could be sold quickly, while other stores, staff, and creditors were left exposed. Some employees and suppliers felt that the deal protected investors more than it protected them. Another underreported detail came from the Evening Standard. Before collapse, Homebase was owed about £5 million in tax rebates linked to business rates and valuation appeals. That delayed cash coming into the business, adding stress to already tight finances. By November 13th, 2024, the pressure became too great. Homebase entered administration, putting about 2,000 jobs at risk. The Financial Times reported that CDS Superstores, owner of the range and later Wilko, agreed to acquire the Homebase brand, intellectual property, and up to 70 stores on the same day. Gavin Maher, joint administrator at Teneo, said in comments reported by The Guardian that the sale to CDS preserves the Homebase brand and secures a significant number of jobs. Late in November 2024, the Evening Standard reported that administrators were marketing roughly 74 other stores, with a bid deadline of the 29th of November. That was the start of the final breakup of Homebase as a full national chain. The spin-off of physical assets moved quickly. On the 23rd of December 2024, The Guardian reported that CDS planned to relaunch Homebase as an in-store brand within up to 70 stores under the Range name, starting in January 2025. On the 6th of January 2025, Kingfisher announced that B&Q would buy 5 Homebase leasehold stores in the UK for £2.5 million. Kingfisher later confirmed that B&Q also bought 3 stores in the Republic of Ireland. Wickes took 4 UK stores. B&M acquired at least 1 site, according to finance RSS summaries and Wikipedia's Homebase entry. At the same time, closures rolled across the country. Insider Media reported that 33 locations shut in February 2025 and 16 more in March. Wikipedia's updated Homebase page notes that the final original stores in Bishop's Stortford, Frome, Market Harborough and Sevenoaks closed on the 22nd of March 2025. The central distribution warehouse in Swindon at Lydiard Fields, about 284,000 square feet, closed in early 2025. Yahoo News later showed the site sitting empty and put up for lease. By May the 15th of 2025, CDS's new strategy was clear. Insight DIY reported that CDS had completed the first phase of converting 55 former Homebase stores into the Range superstores. Inside those stores, Garden Centre by Homebase and Kitchens by Homebase concepts appeared, giving the old brand a new life as a specialist section rather than a full chain. As of early 2026, the mainstream view is that Homebase's downfall was mainly a story of Wesfarmers' failed Australian experiment and harsh UK trading conditions. The record shows something more layered. Westfarmers did enormous damage in just 2 years, as Morningstar, CNBC and SBS all detail. But Hilco's highly leveraged structure, the drop in market share flagged by global data, and missteps on positioning and online shopping also mattered. Macroeconomic pressures made every mistake harder to recover from. A different perspective sees Homebase as a warning about repeated ownership churn. From Sainsburys to Schroeder Ventures, to Argos and Home Retail Group, to Wesfarmers, to Hilco, and finally to CDS. Each change brought new strategies, debt structures, and brand tweaks. Over 4 decades, that constant change slowly stripped away what had once made Homebase different, a clear mid-market position between a warehouse and a lifestyle home store. Today, the Homebase name lives on at homebase.co.uk and inside The Range in Garden Centre by Homebase and Kitchens by Homebase Corners. CDS has also said, according to The Range's updated Wikipedia entry, that it plans to launch an Irish version of the Homebase website. In August, November and December 2025, The Range opened more stores in former Homebase units in Bradford, Oldbury and Wolverhampton, showing that the physical areas still have retail value, even if the old chain does not. The empty Swindon warehouse, the split-up store estate and the quiet closure of the last 4 original branches in March 2025 mark the end of Homebase as a national big-box force. The story challenges the simple belief that one bad owner or one economic shock killed the chain. The data from the Financial Times, Retail Gazette, Global Data, Morningstar and others points to something harsher for modern retailers. In a market where competitors can adjust fast, a brand that keeps changing owners, diluting its identity, and loading up on complex debt can run out of road very quickly. Homebase's insane downfall shows that even a chain that once held 13% of the UK market and employed 17,000 people can be sold for £1, broken apart, and turned into a logo above a garden centre aisle in less than a decade.